Good morning, everybody, and welcome to this webinar where we'll be discussing investing in government securities of Kenya. My name is Nancy from Financial Markets Department, and I'm joined by my colleagues also from Financial Markets on this call. We are here to share with you information, especially focusing around the infrastructure bonds that are currently on offer. We request you to put all your questions in the chat or in the Q&A box, even as the presentation continues, and the team will answer the questions that will be required. So to kick things off, my colleague Gamariel will take us through a very brief presentation. Thank you.
Thank you. And welcome everyone to this presentation. Like my colleague has mentioned, we are going to dive into taking you through investing in government of Kenya securities, that's the treasury bills and bonds. And then we'll briefly talk about the types of government securities, and then the process of investing, that is how you can place a bid, and related other processes. And then briefly we'll look at the bonds on offer, where we'll sort of demystify the prospectus so that people can understand the various technical issues that are highlighted in that prospectus. So I'll just jump in and continue with the presentation. So a quick introduction, just highlight of the central bank as the fiscal agent of government securities. So CBK is the institution mandated with the issuance of treasury bills and treasury bonds by the National Treasury. And as a definition, government securities are just financial instruments that are used by the government to raise funds to meet government's financing needs. It could be in terms of funding the primary public projects or even budgetary needs. Government securities are considered as safe types of investment in the financial market, largely because they have a government guarantee, and therefore they are considered to be safe. The returns are also guaranteed because they are fixed, and an investor is able to tell when they are expecting the returns to come. They're also liquid in terms of trading. You can dispose or acquire one in the secondary market. And it's a sure way of preserving your capital, meaning that if you invest, let's say 50,000 today, 2 years, your 50,000 will still be there. So touching on the types of government securities, largely we have two types. That's the treasury bills and the treasury bonds. Treasury bills are short-term government securities with maturities of 81 days, or if you like 3 months, 182 days or 6 months, and 364 days, which is equivalent to 1 year. Treasury bills are issued on a discount basis, meaning that if you wanted to invest 50,000 in a treasury bill, once I forgot to mention that treasury bills are issued on an auction basis. So once the auction is done and the price for the auction is arrived at, you end up paying less than the 50,000. For this example, we can say you pay 47,000, but on maturity, that is upon expiry of the period of that treasury bill, you paid back your 50,000. So the difference between 47,000 and 50,000 is the return to the investor. They can also be traded over the counter, meaning you just log into your CBS account, either on the app or the web portal, and then you proceed to trade your securities under the menu for delivery versus payment. Treasury bills are issued on a weekly basis. So every week there's a treasury bill on offer. And it's a good way of planning for one's cash flow, because once you spread them out, then you can have income coming on a regular basis. Now I move to treasury bonds, which are basically medium to long term financial instruments. And broadly, treasury bonds are categorized in Kenya. We have two types of treasury bonds. There's the conventional ones, which we call the FXD, or the fixed coupon bonds. And then there's the infrastructure bonds. Let me start with the conventional bonds, that's the FXD bonds, with the maturities ranging from 2 years currently to 30 years. And they are issued. Again, just like I mentioned earlier, we have 3 ways where you can, place your bids. But basically, treasury bonds of 2 years to 10 years, they attract a withholding tax of 10%, 15%, sorry. Any bond with a maturity of 10 years and above, then it attracts a withholding tax on interest of 10%. The infrastructure bonds on the other side, they are tax exempt, and they have a special feature we call the amortization feature, which is basically partial redemption. So again, if, for example, we are issuing, let's say, a 15-year infrastructure bond, you'll find that it has a partial redemption maybe on the 7th year, meaning a certain percentage of your investment will be paid back to you upon on the 7th year. Treasury bonds may be issued at a discount, at par, or at premium. And just to elaborate further on that, when they're issued at a discount, it means, for example, because they are priced in the units of 100, you pay less than 100 for every 100. That's the discount. If they are issued at par, then it means you pay 100 for 100. And when they are issued at a premium, it means the investor is paying slightly above 100. And this is determined through the auction process, because treasury bonds in our market are issued in what we call the multi-price, meaning that people bid just like the way you can bid in any auction. Everyone is bidding their own price, and then the auction committee is the one that arrives at the maximum yield that they can take, and then everyone who is successful pay at their own price. In terms of earnings, the treasury bonds pay a fixed interest rate throughout the life of the bond. And the life of the bond here, I mean the period of the bond between when it was first issued and the time it will mature. So if we take an example of a 5-year bond, interest will be paid for the entire 5 years. And key to note is that the interest that is paid here is calculated annually, but paid out semi-annually. So in the case of a 5-year bond, you will get 10 interest payment periods. Now, who can invest in treasury bills and bonds? So participation in government securities market is open to all, whether local, diaspora, even the foreign investors, that is investors who are not Kenyan. And for one to invest in these securities, the first step, of course, is to open a DhowCSD account. And this one can be done online, either by downloading the DhowCSD app from the App Store or Google Play for the Android phones, or you can access the CBK website and go to the web portal for the DhowCSD. It's a very, very easy process and user-friendly. You just follow the steps, you upload your documents, and then your bank will approve your CSD account application. In terms of who can open the account, you can either open individually as yourself or jointly, but you can also open as a corporate. So it's open to all sectors and categories of investors. I move on to the process of downloading the app, and once you get to the App Store, there is an icon for DhowCSD. DhowCSD is a bot. I think it's a bot. You download the app and then you proceed to create the account. So briefly, I want to talk about the bots that we have on offer for the month of August. I forgot to mention that treasury bots are issued once a month. So every month there are treasury bots on offer. For the current month, we have 2 infrastructure bots on offer. And we'll quickly look at the 2 bots on offer by looking at the prospectus. I'll just dive into the prospectus so that we can all follow as I do the presentation. Yes, a second as I open. Yes, so we have 2 bots on offer the month of August, running until 13th of August at 10 a.m. The first bot on offer is the IFB1 2018-015. And just maybe to explain on this numbering, the first 3 letters IFB, they denote infrastructure board. 1 denotes that this is the first infrastructure board issued in the number in the middle, which is 2018, and it's 15-year. That is when it was being issued. But we are reopening it now, and by reopening, I mean offering it to the public for subscription, and it has about 7.5 years now to maturity. It's paying a coupon of 12.5%, meaning once you buy this bond, you'll be paid 12.5 fixed interest on the face value or the principal amount that you have invested until the maturity date, which is on 10th of January 2033. But you'll notice on the redemption structure, a key point to note here is that if you're investing any amount up to 1 million, then the amortization structure that I highlighted on earlier kicks in, and then you'll be paid the full amount. That is for any amounts up to 1 million, they are paid in full on the first amortization date, which is 10th of January 2033. But if you have invested more than 1 million, let's say for this example, 1.1 million, so you get 40% of that on 10th of January 2033, and the balance will continue until the maturity date. So you'll get the 40% on 17th of January 2028, and the balance to continue until 10th of January 2033. So once the 40% is knocked off, the 550, the interest now will be based on the balance, which is 550. The same again for the other board on offer, which is IFB1 2022-019, again meaning it's the first infrastructure bond issued in 2022, and it was a 19-year tenor. Tenor means the period between when it was issued and the maturity date. Again, since we are reopening this bond, it has about 15.6 years to maturity, paying a fixed coupon of 12.965. Maturity date is 28th January 2041, and it has an amortization feature, the partial redemption I highlighted on earlier, of 50% on that is on 9th of February 2032. So what I mean is 50%, if the amount invested is more than $1 million, will be paid on 9th of February 2032, with the balance running until 2041. Any amounts up to $1 million, then you refunded or you repaid your principal on the first amortization date. I want to highlight on the period of sale, which is 21st of July all the way to 13th of August. This is the period of sale, the period on which the investors are welcome to place their bids, meaning the bids submission will close on August 13th by 10 a.m. So it's good if you're targeting to invest in either of these bonds, you can place your bid between now and August 13th. The good thing with the DhowCSD, in case you put your bid today and you want to change, maybe you want to reduce the amount or you want to increase, you can always log in to the app, cancel your bid and upbid. So it's very flexible in terms of placing your bids. The auction will be held on Wednesday, 13th, 2025. That is after closure of receiving all the bids. And then the settlement date, which basically means the payment date, will be on 18th of August. The amount that we are targeting to raise from these two bonds is 90 billion. And the proceeds of this bond will be channeled towards funding infrastructure projects for the government. When you go to the bidding, there are two types of bids. We have non-competitive bidding and competitive bidding. Or popularly known as non-com, it's the bidding where the investor is not required to provide an interest rate for which they are bidding. For example, if you're placing your bid for, let's say, 2.5 million, then if you choose the competitive bid, you're required to key in a rate that you prefer to enter at for the auction. What this means is if you put, let's say, a rate of, for example, 13%, then that will be equated to the respective price, and that is the price that will be used to pay for your bid. A key thing to note is for any competitive bid, the minimum amount should be 2 million. And I think this is maybe to provide some safety to the retail investors who may not conversant with the bidding, and they're not very keen on where the interest rates are, then they are required to bid at non-com, so that upon the conclusion of the auction, they receive the weighted average of all the bids received. Let me move now to payments. Once you have bid and the auction has been done and you are successful, you can log into Dow and you will get two key things there. One of them is a payment key, which basically is a reference number. It's an 8-digit alphanumeric code, which serves as a reference for your payment and link to your Dow account. The other item you get is the amount payable. So, for example, if you had bid for 50,000, you're going to get a payment key and the respective amount that you will pay. Because the auction, the T-bots are sold through an auction, If you're bidding for 50, it will be subjected to the price that will be determined at the auction. And therefore, that's why you cannot pay in advance until the CBK has communicated to you on the amount that you are required to pay. Now, with those two details plus your CSD account number, you contact your bank and then you process the payment to the CBK. It's important to note that when you place a bid and you're successful, then you don't pay, then you're regarded as a defaulter. Once you have defaulted on the payment, you can be barred from investing in future government securities. So it sort of denies you an opportunity to invest in upcoming government securities. On amortization I want to highlight on the you can use the government security, whether T-bill or T-bond, as a collateral for obtaining a credit facility. So once you do that, it's a very easy process. You just log into DAO, you go to instructions and you create a pledge with your bank. What that means is that you're pledging your T-bill or your T-bond as a security for a credit, for a loan. So the bank will sort of hold those securities and give you the amount that you have agreed with your bank as funds. But a key thing to note is for any security that you're pledging, if you're taking a five-year loan, then you can't. It's not proper to use a two-year bond. So all a bond that is having a partial redemption in 2 years' time. So that's what it means by any security that you're pledging. You need to be sure of when it's having the partial redemption and also the maturity date. Again, for any pledge to get a credit facility, and maybe the loan is a 2-year and the bond is a 5-year, then that process you need to work together with your bank so that to make sure that that process is cancelled before 5 days are over, so that the security now moves back to you and the contract is fulfilled as per the terms between you and your bank. Treasury bonds can also be traded in the secondary market. That's the Nairobi Securities Exchange, and they are traded in multiples of 50,000. What this means is, if you buy a bond today, let's say the value date is Monday next week, you can easily sell that bond in the secondary market maybe from Tuesday. So in terms of accessing your money or liquidating your investment, you can do that at the Securities Exchange. Accordingly, you can also buy, suppose you lease from the primary market or you want to add onto what you have invested, you can also buy from the secondary market by getting in touch with your investment bank or your broker to process the trade for you. I think I'll stop there in terms of the prospectus, and we are happy to answer any questions in the chat. Thank you.